And now it's time for our weekly energy update with Dan McTeague, president of Canadians for Affordable Energy.
Well, thank you. Thank you for that, Nima. And as expected from last week, there was, in fact, an increase across most provinces in terms of gas prices. Looks like we finally saw a bit of a breakout. Oil staying in the low 70 range, high 60s for West Texas Intermediate. And of course, always about $4 to $5 a barrel more for Brent. Finally broke out this week on news, of course, now supported not just by OPEC, but the International Energy Agency, that there is, in fact, a growing demand, request from markets and a significant drop in supply. It looks like Russia has made good on its commitment to drop its production to meet the OPEC plus quota by 500,000 barrels of production a day. So this is really starting to catch up with the market. And although there are still many nervous Nellies out there who still think that interest rates, as important as that is, especially in the United States, will have a dampening effect on demand. The reality is that supply seems to be dwindling a lot faster. So we live in a bit of a parallel universe in which we have traders, energy traders, who really aren't energy traders, but in fact speculators and using AI and all sorts of interesting concepts to come up with gas pricing strategies as far as investments. We also see banks hedging. So a lot of folks that have money in there have used their oil assets, sold those off to improve their balance sheets after what we saw a couple of months ago in the United States with the spate of dodgy institutions who put a lot of money in other places, including ESG, and have now been burnt for it. So we're now seeing a bit of a change in markets. And what that really means is that for the next week or two, heading towards the midterm of summer, we're going to see prices maybe go up a little bit, but they're going to level off. And I don't see oil moving much past $78 a barrel for WTI and 85, 86 for Brent, at least until the first week of August, at which point I think we can start to expect we're going to see activity from pipelines, refineries switching over, and of course hurricane season, which much to the disappointment of climate alarmists, really hasn't been a big deal up until now. And so, but nevertheless, we will have a season. We will see that kind of weather, usually between mid-August all the way into the end of October. What that means is that right across Canada, starting with British Columbia, look for Vancouver prices to remain where they are in the 191 to 194 range. The rest of British Columbia looking at more between $1.69 to $1.74, depending where you are in Kelowna, Kamloops, Penticton, those places. Prince George up at 163, remaining there, not budging at all. As for Alberta, again, cheapest prices, mostly because, not because they have refineries there, because they have a lot of oil, but in fact, the lowest taxes in Canada. Look for those prices to remain, range bound within the $1.33 low end, $1.39 at the high end. That's only because gas stations tend to really fool around with their retail margins. Same for Saskatchewan and Manitoba, remaining in the 157 range, 155 range for Saskatchewan, Ontario. Your 162.9, which we said would happen last week, look for that to come down a little bit, maybe to 160.9. So a savings of about 2 cents a liter. Same for Montreal, Quebec City, and Quebec. Look for those prices to range at about $1.70, where the next week, Atlantic Canada, we're going to see prices finally stabilize. They're now in the low 170s, thanks to carbon taxes, not just one, but two being implemented in Canada. Now, I want to mention something that came out last week that I think caught a lot of people off guard. The Canadian Fuels Association thinks it's a wonderful idea to have a second carbon tax. I want folks to know that not every refinery is on board. Those that can't mix ethanol into gasoline have to pass on those costs to consumers. They're clearly not happy, especially if you happen to be a refinery that's supplying the bulk of your fuel to your customers in the United States that doesn't have a carbon tax, not one, and certainly not two. So it puts some refiners at an advantage, others at a disadvantage. But I want to signal something that you don't hear a lot from anybody. The amount of money that refineries are making amounts to about 35 net cents a liter to turn crude into gasoline. And so I think it's nice to have some refineries come out and say, hey, love the second carbon tax. We don't care that you're going to have to pay for it. But they all ought to be very careful, because people like myself will call them on it. When I see crude to rack spreads of 30 to 35 cents a liter, in Eastern Canada and even Western Canada is cause for concern. And maybe their giddiness is not well placed, certainly when it comes to consumers. Nima, that's it for this week. I'm going to be off for a couple of weeks. Looking forward to seeing you before the long weekend.
All right, thanks for that, Dan. Again, that was Dan McTeague, president of Canadians for Affordable Energy. All right, stay tuned. More news coming up after the break. We'll be right back.